The governments and central banks are encouraging massive historic levels of risk taking right now. And is there any sign of caution? No. Why would there be? There will always be more stimulus, more money printing, more free stuff. But in this life, we can be certain that nothing is for free. There is always a price to be paid, always more burden to bear by the middle class. Good luck. You came here for the truth, so let me unveil that for you. Today, we are going to talk about student debt. We're going to look at 55 corporations that paid no income tax. We are going to look deep into what's happening with Manhattan's real estate. Let me give you a spoiler. It's looking like it's on the way up, at least in the short term. I'm going to show you what's going on with the job situation as well. Let's begin. Government grew by 136,000 workers in March. So the jobs numbers come out. Everybody is so happy about it. You have more growth. The job situation looking fantastic for so many. Here's where the jobs are in one chart. Leisure and hospitality, 280,000. Just beyond that, we have government at 136. More importantly, construction is at 110,000 and manufacturing 53,000. So these are the things that we should be paying attention to. Of course, when you see leisure and hospitality, I think it's interesting because that shows you that some of these are starting to open up in places, bringing those people back. Now, while the pay might not be great, and these are not necessarily the greatest jobs that are to be found, but these are the people that have been hit the hardest. So that's important to see them going into these positions again. If they are there, there's a reason for it. That means the businesses are starting to open, which means hopefully that the economy starts to recover. But it looks like for many industries that you're not going to necessarily have a quick rebound. People today, right now, this summer, they're probably not going to go on an airplane and head off to the Cayman Islands as much as they had done in previous years. Maybe they're going to get that RV. Maybe they're going to go to the cottage. They're going to rent a place. Maybe they're going to travel within their state and see things they never had before. You look at other countries probably doing the same thing. So that traditional vacation is probably not in the cards for a lot of people, not just because of the restrictions, but at this point, maybe they're just not there yet. So we're seeing sort of a different type of environment for many of these industries. And a lot of people, they've been renovating their homes. They put pools in their backyard. They're getting, the patio furniture and all this. All of that data is there. And so maybe a lot of them will simply stay home and hang out there. And that means less money going into the economy. Now, they've been purchasing a lot of stuff through 2020, during that summertime. So we'll see what happens here. And that's going to give us some insight into the rest of the year. To me, this is the big article of the day, and then I'll show you the actual report itself. You're seeing right now, they're talking about raising taxes on corporations, but this new study found that at least 55 of America's largest companies paid no taxes last year on billions of dollars of profits. Look, if they lost a lot of money, this is the way it works. People need to understand it works differently than a salary, okay? So you've got the corporation, they've got their income, their profits, and they've got their expenses. And if the expenses exceed that, then of course they don't have to pay the tax. It's not like an individual that makes, let's say, $100,000 a year. They don't have really any expenses, maybe small expenses, but that doesn't change that much, okay? So it's a whole different ball game, okay? Now, the tax code is written specifically to favor the biggest of the organizations. The bigger they get, the more the tax code is able to benefit them. That's the way it's designed on purpose, okay? And then you're looking at this, they describe exactly what had happened. I'm going to show you the list of all those companies, but they just mentioned right here, like FedEx, for example. Salesforce is another one. These are massive companies. It's not small companies and they got away with it by doing this trick or that trick. It is written this way intentionally, and there is no exception, and it's not going to change. It's not just the United States. This is going on all over the world, and they're able to do this and will continue to do this. 55 corporations paid $0 in federal taxes in 2020 profits. This comes from this place here, itep.org, which you can check out for yourself if you are interested. And they get into a lot here. Of course, I'm not going to be able to cover the entire report, but if you want to know about it, highly recommend it. The link will be in the description. The tax avoiding companies represent various industries and collectively enjoyed almost $40 billion in U.S. pre-tax income in 2021. So we're talking about a lot of money right here. The 55 corporations would have paid a collective total of $8.5 billion for the year had they paid their rate. Right here, they're showing you the corporate profit, 21%, in their 2020 income. Instead, they received $3.5 billion in tax rebates. So that's interesting just to see the way that worked this time around. They get into a lot of more of the details if you want to check it out, but I'm just going to quickly show you this chart. I'll scroll through just to give you an idea of some of the companies. AMD is one of those. Okay, big tech company there. And then they show you the rate. And a lot of these are minus. Now, it depends on your area, and I don't know the tax laws and everywhere, but what you have to know is that for corporations, if you took a loss one year, you take a loss the next year, and then you had gains in the following year, you could use those previous losses to offset those gains. So it works like that, okay? So understand that when they take these losses here, even if they have big gains next year, they can actually offset that and potentially do very well for a period of time, okay? So Booz Allen Hamilton Holdings is in here as well. If you recognize any of these names, of course, if you want to check out, link in description. Dish Network is in here. FedEx is in here. HP is in here. And just go down. Nike. There's so many big companies that it spans different industries. You see tech companies, you see oil and gas, you see financial, all kinds. So definitely I would recommend taking a look if you are interested. The point I wanted to make is that there's so much money that goes in through the system and all the stimulus, and it doesn't actually fix all of the holes that are there. And then they keep saying, we need to tax the rich. And then you look at it and realize the multinational conglomerates don't pay any taxes, and that guy with the BMW down the street is paying extremely high taxes. So the whole thing is messed up. It doesn't make any sense. Take a look at this really quickly. I found that interesting, wanted to bring it to you. You can see here an insider trading indictment shows ties to Bloomberg News scoops. For more than 6 months, federal prosecutors say a New York man used inside information to make illegal profits in the stock market, and a core element of his alleged scheme was his interaction with Bloomberg News, which published several stories shortly after the trader arranged to make significant purchases of the company shares. I want to look at this a little bit deeper and think to myself how many cases they're actually pumping out news intentionally and the things go unnoticed. This has to be not just one individual case. Oh, some rogue journalist is involved and giving this information there and this person and that person. It's definitely more than that. And we even have seen cases in which there have been, Forbes getting paid to push certain stocks and so on. There's a lot that goes on here, and I know that they are being basically putting the information out there, and it's not necessarily to your benefit. Take a look at this article. Wall Street's fixation on quick profits wreaking havoc in the real economy. This is what we've talked about so many times before, all right? Vast sums of money sloshing around in the financial sector are enriching shareholders, but producing little real-world value. All right, now saying basically that they find that much of the money that businesses once funneled into productivity, increasing assets, structures, equipment, and intellectual property is now being diverted to shareholders instead. So true. Absolutely so true. And this is the way that corporations work today. They're not after the total benefit. They're not after making the companies better in so many ways. They simply take that money and they do stock buybacks. Oh, yeah, don't worry. We're going to help you out a lot. We're going to pump up the stock. It's only to help out the insiders because they are able to get massive compensation as a result. That's the way that this works. I hope that people find that to, something to look into because it is absolutely a reality. Of course, if you have the time, definitely read it. This is a good article. Quick update on what's happening with Archegos. And essentially, this article here is talking about Nomura, and they got burned as part of the other group of Credit Suisse and others who really took a hit on this, and essentially saying that they believed the guy was a good guy. He was saying a lot of things and sort of paid the price, and now everything was good. And for a while, everything looked fantastic, but of course, it fell apart rather quickly. So the problem, and I've mentioned it before, is the derivatives that they were using, basically owning none of the underlying securities and being able to multiply them several fold. It's just so wacky, and yet that's what we're dealing with, not just with this one company, but with others as well. Things can unwind very, very fast. Few quick updates here related to Manhattan. Of course, we had seen rents dropping quite a bit. Sales were down significantly. Now, Manhattan's residential real estate market dormant for months, and now saying closed its first quarter by posting its strongest sales in years. We have a rubber band effect going on in Manhattan. We pulled the rubber band one way in a bad direction during 2020, and now it's kind of shooting back the other way. A year after the cratering of the Manhattan sales market, the borough is poised for a recovery thanks to price cuts, renewed confidence in the city, and a surge in first-time homebuyers. So all of these things together have created at least, we'll see what happens, but at least a short-term boost for Manhattan's real estate. There's a lot of cash that's going to come in fairly quickly here. It's going to provide big pops to places that have been more or less shut down. Talking about federal aid and so on. Still, the road to recovery will be long and steep. And of course, you know that all these different industries, you got the arts, hotels, restaurants, they were decimated, thousands of businesses closing for good. You've got so many people that normally would be moving in and out of this place. And if everything's shut down, that can't happen. But the problem I find here is that there's a lot of permanence in these shutdowns. It's not necessarily just a temporary thing. You close for a month. A lot of the businesses, they can take that, but it wasn't like that. It was open, it was closed, it was open, it was closed. And many of them just said, look, I'm done. And for those people there, you just see the store after store after store after store after store that are just empty. The rents are still going to be, if somebody wants to get in today, the rent is still extremely expensive. Even if they brought them down, it's still expensive. And the question is, are people going to necessarily go in right now? That's what a lot of them are dealing with. Look, if you've got restrictions, 25% capacity, it's not worth opening up now. So you got really, as they mentioned here, the city still has a ways to go. All right, all of that to get to this. I needed each of those points to bring me to this. We're talking about the potential for canceling student debt, the amount of which we don't really know. They've drawn up this number here of $50,000. Now, I want to talk about this. Number one, student debt is potentially the biggest bubble that the US has. You see it just adding up and adding up and adding up every single month. It just continues to get worse. In the end, people are generally, what I've been finding is that they're left with actually less and less. The more people, the more time that passes, the less that the value you get out of it too. And that's so strange, but that's really the way it's been working. The degrees that people are getting, these papers that people are getting, seemingly are less valuable as time goes on. The more people that get it, it's like the way that they have this, the whole monetary system, it's being devalued the more money they print. Well, this right here is just one factor, the debt. However, there are people that had been paying all throughout, paid down their $50,000, their $100,000, and then you have other people who intentionally did not pay their student debt. And now you got people who are struggling, who simply cannot afford to pay that student debt. So there's all these different cases here. But to those who were diligently paying down, maybe they had 2 jobs, maybe they had 3 jobs, and they struggled along, they may encounter a time in which their debt is simply wiped off. Now, what does that say about those people that were working so hard to pay it off? To me, okay, you can look at it from every different angle, as I mentioned, but we have to understand what this signals to the public. Get into as much debt as you possibly can, because don't worry, we're going to take care of it. That's the signal. Remember that. Forgiving federal student debt would mostly benefit middle income quintiles. So they break it down essentially, and it's not as if the people who are struggling the most are the ones that'll benefit the most from it. That's not the case. Goldman Sachs provides this here. Federal Reserve Board also puts in some of this data. They probably pulled it from the Fed website, I assume, but you can see right there where it's coming from. All those details are here. And that to me just gives us a little bit of real, true insight. You could say, well, the people that are in poverty, they need help. Well, that's something. But you can take a look at the numbers and it tells a different story. So what do you think about this? What's your opinion? Do you cancel the debt? Do you cancel it all? Do you cancel some? Should it be a percentage? Let me know in the comments below. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce, you want to make some money online, you can do that for free at the AmazonGPS.com. If you want to understand the financial system top to bottom, A to Z, you can do so in my 2 books explained so easily right here. Check them out at the link in the description. Have you seen this video? If not, you definitely want to check it out. What are you waiting for? Click it and I'll see you there.